Well, good afternoon and happy Monday to you. This is James Hecker, Mortgage Advisor, bringing you the weekly mortgage rate recap and forecast. And so the recap is much the same as I've been saying, sounding a lot like a broken record. Interest rates have been going up. And so a lot of that is from the inflationary pressures here in our economy. The feds have been trying to counteract that with increases to the discount rate, which although do not directly affect mortgage rates, that's the direction interest rates are headed, and mortgage rates are anticipating that and following that. But last week, interest rates went up somewhat on the heels of activity in the United Kingdom. So also, the United Kingdom is seeing inflationary pressures as well. And so what happened is they came out with a quantitative easing type of a program that we had, to slow down inflation that included some heavy tax cuts. Well, tax cuts tend to promote the economy, and so the market reacted negatively to that as inflationary. And so we saw mortgage interest rates here in the U.S. Peak above 7% for highly qualified mortgage buyers for the first time in over 20 years. So later in the week, the Bank of England kind of loosened up on that lower taxes, but quantitative easing and helping the economy and trying to fight inflation. So our rates kind of backed off of that over 7% territory the end of last week and started even a little bit better this morning. They're still in the high sixes for the best qualified buyers. And that really changes the marketplace. That makes it more difficult for a lot of people to qualify for a median priced home in their area, country, or locale. But it does create more home buying opportunities. So the forecast is that we're entering into a different market. There's more homes on the market. There's more inventory. Sellers are beginning to realize that they're not able to just put their house out there on the market at a make me sell price and expect it to get multiple bids over what they're asking. They're bringing those prices into somewhat more realistic ranges in this current market, and they are accepting terms, whether they're helping the buyer with closing costs, which helps buyers a lot, or lowering the purchase price. Those things are taking place, and that creates an opportunity for buyers. So if you're a buyer that can still afford in this market the prices and the interest rates, you're going to see more opportunity than you did last year. Last year, you'd go to buy a home, make an offer on a home, you and 20 other people, and then that bidding war that was taking place, offering more and more and more over the asking price to where somebody finally won out. That's not taking place right now. Sure, we're seeing a few multiple offer properties when they're priced right to begin with, but we're seeing a few multiple offers instead of 20 or 30. And some of them not seeing multiple offers at all, sitting on the market longer and lowering prices and things like that. So that's an opportunity for buyers. So if you stepped away from the market, not because you couldn't afford it, but because you got tired of fighting for and being outbid, now's the time to look at it again. These mortgage interest rates are here to stay. They are likely to decrease somewhat as the battle against inflation is successful in slowing down the economy. We're going to see slightly lower interest rates, but we're not going to see the interest rates that we saw in the summer of 2021. That's very, very unlikely. So if you want to be looking at a home, now's the time to be doing that. Contact the realtor that you've been working with. Reach out to me to find out how much you can actually afford. See what programs are available to take advantage of this marketplace. Some people are going into it with the consideration that, I'll take this, high 6% rate right now, and then next, middle of next year or whatever, when rates start to hopefully come down because the battle against inflation is gaining, then I'll just refinance into a lower interest rate. So there's that. So give me a call at 661-714-2145 if you have any questions about the market, about what you may be able to qualify for, about how to help someone you care about in this environment as well. And, what are some of the new programs that are available? Just give me a call. I'd love the opportunity to speak with you. 661-714-2145. Have an absolutely fantastic week. Thank you.